Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of November the 4th, 2024. Now, to get started this week, we'll begin with the US dollar, but it will be a very choppy, volatile week. We've got the Fed, we've got the US election. So right now, the dollar continues to fail at the monthly highs, these verified zones sitting between 105 and about 104.50. Now, the predicted differences in Vantage Point measuring the strength of the medium-term trend against the long-term trend continue to move down as the dollar index has moved up. But as you can see, we basically hit a wall here at 104.57. There'll be additional resistance up to, again, about the 105.10 area, and that should contain the dollar for the entire month of November, regardless of the Fed, regardless of the election. And now, again, the Fed is the concern. Because with the most recent labor report confirming that the labor market is absolutely slowing with only 12,000 jobs. We're still missing about a million jobs from the seasonal adjustment where they reported the error. So again, on Friday we've come down, hit our T-cross long 103.68. If we break through this particular area, which is more likely than not, then we would see a much deeper move, probably back into the 101.37 by year end. Now, gold is not immediately benefited from that payroll number, but it likely will. And again, it always takes a day or two for the market to digest the payroll number because it's complicated. The U3, the U6, again, the average hourly earnings. It's a very complex report, but in short, the labor market is slowing, so that's pointing towards a potential recession, which does favor gold. So right now, our T-cross long, that's coming in at 27.15. The indicators are somewhat mixed here, but as you can see by the predicted RSI, we're not breaking through that 40 level. So we don't have the downward momentum here. This appears to be corrective in nature. Watch this area very closely at 27.15 this coming week because, again, this is an outlook, guys, not a recap of something that's already happened. We're forward looking into next week with major support and resistance levels. Now, the monthly opening on this, again, very important. 27.43. We've closed at 27.36. So gold is very, very slightly negative on the month. But again, the T-cross long should provide that additional support. Now, looking at the S&P 500, obviously they're not responding well to this election. I think a lot of market participants are basically hedging their bet, which I'll talk about more in a minute with the VIX. But when we look at the S&P 500, our T-cross long, 57.85. So yes, the Fed is likely to cut a quarter basis point, but the equity markets may not respond the same way they have over the last several years. So again, we'll monitor these particular levels, but my concern here is we have a considerable gap from where the market is now and the current calendar yearly opening price at 47.45. In many years, regardless of how big a move I've seen in equities, I've also seen a significant sell-off getting close to the yearly opening price and then rebounding a little bit higher. So with the verified support low, the next low we have here is 54.06. That is a considerable distance from where we currently are right now. So some volatility coming into the market. We can assess here, or I can assess, but I've been monitoring this VIX very, very closely, and in my respectful opinion, I think that they're hedging their bet. They're both long the equity markets and they're long the VIX because they're not sure the outcome of the election, what the Fed is doing, not doing, because every week he keeps flip-flopping based on the lagging data, CPI. But the labor report should send a pretty clear message to the Fed that he should be cutting, as is the Bank of Canada, the ECB, the Bank of England, globally, they're cutting. So to get out in front of this, we'll see what he does. But right now, the VIX still needs to break through that verified resistance high. 2149, additional verified resistance that has formed this very dark, ominous cloud over the VIX from moving higher, comes in at 2274. So we're going to need to break through both of these particular levels, and that is entirely possible looking at that S&P 500 chart. Now, Bitcoin, again, coming off of a very, very strong month. Not surprisingly, because again, I've talked about that VIX, or excuse me, the Bitcoin considerably over the last period of, or I would say arguably the last probably 2 months. Now, looking at Bitcoin here, we can see that Bitcoin is coming off of it's had a big push at the start of the week, 73,534. We've retraced back to our T-cross long. The structural bias of Bitcoin remains solid. Now, November is not usually as strong as October, but it still looks good for a retracement higher. But again, the market waiting to see what happens with the Fed, the election, all of these different things. So again, or T-cross long 69,912 on that. But again, when we're looking at that current monthly opening price coming in at or about the same 69,912, we want to watch this area very closely as our T-cross long, excuse me, is a little bit lower than that at 68,376. Now, we do have a corrective sell signal on Bitcoin, but when we combine that with the predicted RSI, we can assess we don't have downward momentum. So it's telling me that basically this is just a simple corrective profit taking ahead of some major event risk this coming week, and then we go higher. Again, if we look at Bitcoin, guys, since about 2014, when you've had 1 year in Bitcoin where it's been down 50% or more, it has rallied for the next 3 consecutive years. This again occurred back in 2018, same thing. So in 2022, I believe it was, we had the same thing. Bitcoin selling off 60-70%, but we have fully rebounded from that. Last year was the first year of that 3-year cycle, being up 155% last year, and we're up over 60 this year. So in my respectful opinion, only Bitcoin still has 2025 as a strong rally, and then in 2026 we likely get into potentially another down year. So right now, unless we have momentum breaking on the predicted RSI, longs are still heavily favored on the Bitcoin contracts. Now, light sweet crude oil responding to some of the things in the Middle East, but as you can see, this is why it's very important we stay away from these rolling performance models, guys, where we use a random 52 days, a random 30 days, random 60 days. This is the calendar year open. It is indisputable that oil is bearish while below this particular level. When we've broken down below it, there's been a significant sell-off. Now, 71.78, very important. The T-cross long at 70.02. But again, the indicators still are lacking momentum to the upside. So again, if there is a pending possible recession coming in the US, then that does not bode well for oil longs. But either way, this time of year, I tend to lean towards nat gas with the heating season, etc. But again, if we get above 71.78, we have to stay above that to remain long here, guys. And as you can see, the geopolitics, everything else has pushed it higher, but ultimately it's always gone lower. Now, as we look at some of our main Forex pairs going into next week, all eyes will be on the euro. Now, very interesting that we've closed one day on Thursday above the T-cross long, and then we moved lower on euro US on that horrible payroll number. So this is very likely to be a fake price here. So our T-cross long 108.68. If we can hold above this level next week, then longs are absolutely in play. I believe they're in play either way into year end, because in most cases the dollar does not do well in its fiscal first quarter, which started on October 1st. While the rest of the market's in the fourth quarter, the US dollar is actually in its fiscal first quarter. Always remember that. And it usually does very poorly until mid to late January, early February. So if we can clear that, but as you can see right now with this pink line, we do have a medium-term crossover. If you click on F7 in the Vantage Point software, you can see a new crossover is formed after a very long downward move. So the probability that that crossover is right is very high. I suspect a downward move on Monday, and then on Tuesday, Wednesday of next week. Once we get past this election, the euro is likely to move higher. Now, the US Swiss franc, again, the Swiss franc being a risk-off currency, if those equity markets come under pressure and the VIX is the one that breaks higher, you want to look at shorts on this particular pair. Very significant resistance forming up here. That high now coming in at 87. I believe we can push a little bit higher towards this verified resistance high at 87.49, and that's where the sellers are likely to come in. The predicted differences, you can see it looks just like the dollar index. A little bit of a concern, that reverse check mark here that I've talked about in previous webinars, hitting that 40 level, and then you can see we've rebounded here on Friday. But again, we must break through 87.50, guys, if this pair has any chance of going higher. And at this time of year, that would be very unlikely. Now, with the pound dollar, again, we are holding above 127.32, the calendar yearly opening price. Now, as long as we're holding above this level, there is a slight bias for longs here. Now, the signal is starting to progress. There's your check mark here on the neural index strength. So while the neural index is red, it's important to point out that inside the neural index, the angle is actually pointing up, suggesting that, look, something is going on here. So our T-cross long, 130.09. We need to get above that. Once we do, we should be able to target back into this 134.30 area into year end. But again, we will see where with the data and everything that's coming out next week, it could be very positive for the dollar or it could be very negative for the dollar. So we're all waiting on pins and needles to see the outcome of the election. And in next week's outlook, I will briefly speak to it and see where we're at. But again, hopefully it's not contested and we move through this. Now, the dollar yen, once again, I believe the carry trade is going to come under significant pressure in 2025, probably in the latter part of 2024, meaning mid-November into December and then starting in January. So each time the Fed cuts, the interest rate differential between the Fed and the Bank of Japan is going to change. And slowly and slowly and slowly, they will get tighter on those spreads. And that will bring dollar yen probably crashing back down into the 120 area next year sometime. So again, we've got very strong verified resistance at the high of 153.87. I do think the pair will remain firm until after the Fed and after the election, and then we'll see where we're going. But ultimately, I don't believe the Fed can hide from this anymore. He's going to have to make significant cuts. And again, it's all about the interest rate differential, guys, and the carry trade. If the market believes what I've just said, then they will start slowly or rapidly exiting the carry trade. And when they do, pairs like US Swiss franc go lower, but dollar yen will be dramatically affected by this. Now, as we look at some of the additional Asian-backed currencies like the Aussie US and the New Zealand US, I believe there will be very good opportunity on these two currencies in 2025 and in 2026. So right now we have a verified support low that's coming in at 65.37. Watch this area very closely next week, but as you can see, the predicted differences measuring the strength of the short, medium, and long-term trend, they're running sideways. The neural index went off yellow there in the strength, and then it's pointing back down. So what I often see on Monday after the non-farm payroll is the price continues until about 10 a.m. Eastern Standard Time, and then all of a sudden it starts to flip. The market has to digest that labor report and all the components within that report. So again, we'll watch it very closely, but there is a heavy bias against the US dollar, and these pairs are places of value. If we look at the Kiwi, we've got the same thing here. If I just take this and visually draw a line right there at 59.35, we would need to break down below that, but either way, longs are heavily favored if we can get down to 58.51, but I will respectfully submit that is unlikely at this time, but still possible. So we have a very, very choppy week ahead of us here, but with that will come opportunity. So with that said, this is the Vantage Point AI Market Outlook for the week of November the 4th, 2024.